I'm going to talk about the 5 stocks to buy now before August that I'm actually adding more to the portfolio, and I'm even playing earnings on most of these stocks. So I'm going to dive into exactly the positions I have, which new ones that I put on. I'm even going to cover the overall markets since we're making new all-time highs on a daily basis, and when I think the market may crash or roll over. And I'm also going to show a brief portfolio performance report so that you could see that for transparency reasons. But remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. So let's go ahead and dive into the portfolio. As you can see, we're making close to record highs here, but let's go ahead and dive into the progress report. We're gonna go here. This was today's gain, and then we're also going to go custom date range, and I'm going to switch that to this month. So we're going to go July, as you can see. And for this month, I've made about 29K on the portfolio. Obviously, these results vary month to month. No losses for this month, so that's good. But again, results vary, and I'm not the only one doing it. As you can see here in Options Trading University, we have clients sharing inspiration based off of their performance. Obviously, their results vary based on account size. You can see right here, we have clients closing out some positions today. And we even had one client here, Jason, with a very nice win. And I'm glad that he shared that inspiration for others. But again, if you do want access to that, that'll be in the top of the description. Also, if you want my free trade ideas, I give those away weekly here on my Instagram and my free newsletter, which are also both down below in the description. So make sure to check those out. And if you get value out of this video, please give it a thumbs up, as I appreciate you being here. But let's dive into it. We're gonna talk about the overall markets, and then we're gonna dive into those 5 stocks. So right now, currently we're looking at the CME FedWatch tool. I look at this every week just to make sure we are getting interest rate cuts, because those are good for the markets. Businesses and consumers can borrow at cheaper rates, and that's always good for the stock market. But as you can see, the rate cut coming in October, 87% probability. That went down a little bit, but that's okay because we still are getting rate cuts. Those are being priced in the futures market. And if we look at the overall kind of under the hood, the fundamentals of the market, okay, we're looking at the 10-year yield, the treasury yields. They're going down 4.3%. That's good for interest rates, right? That means more people are investing in US treasuries and bonds, and those yields are coming down. So that is good for interest rates. And then if we look at the S5FI, this is something I haven't looked at in a while with you, but this is basically the S&P 500 stocks above their 50-day moving average. So because the market continues to make all-time highs, I want to see, are we overextended? And this is a perfect indicator to look at to see if we're very overextended. Now, as you can see, 65% of stocks are above their 50-day moving average. That is not super high. That is not super overextended. We've seen areas in the market where, we were at 92, right? And we're at 93 here, right? So there's been areas where basically 90% or more of stocks were above their 50-day moving average, and we aren't even close to that yet. So we still do have room to run here, but I am remaining cautious, and I'm going to show you exactly why. If we look at oil prices, those are looking good too. This is good for inflation with oil, the price per barrel of oil sitting at $65, okay? So that's going to be good for inflation purposes as well. Now, let's dive into the overall markets. We're taking a look at QQQ, which tracks the NASDAQ 100. This is my favorite ETF to look at. And today we made new all-time highs, okay? We hit 564, pretty good there. Kind of nice, clean, even uptrend here. And on the downside, if we did experience kind of a pullback on any bad news, I believe right now, we'd probably hit somewhere between this 545 area to 549 area, worst case scenario. And I believe that would be a buy the dip situation. VIX might spike up to, 20 plus, and then you just buy the dip, right? But I don't see that heading. I don't see that coming in the next week or two, okay? Earnings are around the corner. I believe earnings are most likely going to be good. So I'm looking at QQQ around this 580 area as being kind of a target to say, hey, this is when I want to start freeing up cash. Because if we look at VIX, okay, VIX is at 1650, which is still slightly elevated. There's still some fear in the market right? But once this thing heads to sub 15, I will be putting a lot more cash. Now let's take a look at the VIX cash allocation levels. As you can see, we're currently at this level, slight fear. So I could have 60 to 80% of my cash allocated, or 20 to 40% sitting in cash in my account, okay? I currently have 10% in cash as of today. And the reason I'm so aggressive is because I do think we have a little bit more room to run before this market potentially rolls over. So I just want to be positioned for a bullish run here. So again, let's go back to VIX, and I want to show you kind of why I think that is. So if we go back here, okay, we are in, again, a nice steady uptrend, all right? But here, we kind of went straight up back in May 2024 all the way to July of 2024. And I want to show you where the VIX was at those levels. So VIX got as low as 1191 here on VIX, okay? This is where we're currently at. So fear is definitely higher, okay? If I take this trend line here, actually, let me just grab that, okay? Fear is definitely higher than it was previously, okay? So this is kind of what I want to see. I want to see the VIX break this 15 level, and that's kind of when I'm going to be having at least 25, 30% minimum in cash in the portfolio. So until that happens, I'm very, very bullish. Now, let's dive into the 5 specific stocks. So the first one's going to be NVIDIA, okay? This is a recent adjustment I made in my portfolio. My long-term thesis is that for this year, I think this thing could get up between 180 all the way up to 200 by end of year, as you can see, okay, if we just follow this nice steady trend line here. And I don't think that would be far-fetched to say. Now, with that being said, I am still a little bit nervous with the stock running up so much since the bottoms, right? If we see how much it's ran up from this April 7th low, right? We are up over 100%, okay? So that makes me a little bit more cautious. So how I'm playing this, I had the 150 puts, okay? I like to sell cash secured puts on all of these stocks so that I could potentially get the stock at a discount if the stock does go below my put price, and I get paid to do so. So I like that. So what I did today in the account, now remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Results may vary, but we're gonna take a look at the portfolio and we're gonna go to NVIDIA. My current position of cash secured puts is 66K, all right? And I just rolled all of my 150 puts that were expiring August 1st. I rolled them up to 165, all right? So if we go to the options chain, I went out to earnings week. The reason I did that is because implied volatility is much higher, 45%, okay? And the expected move for earnings is plus or minus 20. So this thing could go up all the way up to 192. That's what market makers are expecting. Or it could go all the way down to 152, okay? So there is some downside risk there. So what I did was I went to the 165s. Now, this is a very aggressive move. If I wanted to play it a little safer, I would go to the 160 strike, collect 440. That's a 2.88% ROI. Now, remember, those numbers vary. That's not guaranteed because the stock is always moving. But I'm collecting, I collected 3.82% ROI. Again, numbers not guaranteed, but that was a healthy return profile for me that meets my objectives. So I like that, and I like the stock at 165. I'm willing to get a sign there. This is currently kind of where the put is that I sold. It's right before we gapped up, so there's a lot of support there. And if it does come down from all-time highs, right, I'm getting a 5% discount, and I collected a premium to own those 100 of those shares per contract. So I like that level. And that's the adjustment I made here today in NVIDIA. NVIDIA is trading at very low valuations, PE ratios at 55. Previous all-time highs, okay, back in 2024 when we had that crazy run-up in July of 2024, this thing was trading at as high as an 81 PE ratio. So I believe this company is undervalued and the stock is finally performing how it should be, right? And investors are rewarding NVIDIA now for their massive profit margins and amazing earnings, okay? So NVIDIA, that's gonna be the first stock, okay? I don't think this thing is gonna head much lower. In fact, this stock and the next the next two that I'm gonna be talking about, I don't think are heading much lower. I think they're heading higher from here. The last two stocks I'm gonna talk about, I believe could head much lower, but I'm going to show you where the buying opportunity will be. Okay, so the next stock is going to be Amazon. This thing still hasn't recovered to previous all-time highs before the crash. So this is a very discounted stock, 37 PE ratio, very blue chip. Okay, and it's forming a nice upward trend here. That's exactly what we want to see, okay, on this stock. A lot of buying volume here. We're not even overextended on the RSI. So this is a perfect stock for me to put into the portfolio. Now, I did up my position today, okay? What I did was I'm playing earnings. So we're going to go back to the positions. As you can see, current collateral on the stock is 66K in cash secured puts. And if I go to my current position, so I have 100 shares, most likely going to get called away on Friday, okay, at 2:30. So I'll make a nice profit there between 225 to 230 plus the premium I collected for that covered call, okay? And then I'll probably sell some more puts. But I did get into two August 1st, 222.5 puts, okay, to collect 807. All right, now obviously results vary because these numbers are changing. This may not be the same now, but I felt very comfortable there in 11 days. So if we go to the options chain, we can go here, 11 days out. And as you can see, a 1.8% ROI. Results aren't guaranteed. Results vary, obviously, because these numbers are changing, as you can see the options chain. But I felt comfortable collecting $4 at that strike, okay? So in 11 days, the risk is if the stock goes below 222.5, I will be forced to buy 100 shares per contract. I'm totally fine with that because I had shares at 225 during the crash, and I just got those called away. So I love Amazon at that price. So this would be an earnings play that I really like. So that's going to be Amazon in my current position there. And I do plan on adding at least one more cash secured put for earnings once I have some cash freed up this Friday. Okay, so that's my Amazon play. Let's talk about HIMS. Okay, so HIMS was a big one. A lot of you wanted an update on my current HIMS position. I rolled down my 54 puts during this 34% crash that we had, right? And I still have the whole position. So if you look at my position, okay, 130K in cash secured puts, all right, and we'll click on that. Only the 48s are in the money. And it looks pretty good, right? We're up total about 13K on those, but you know, these numbers fluctuate. I'm gonna wait until this thing gets back up to 50 to 52 to potentially roll this, close out, collect my premium, and then open up a brand new position to be kind of in a big net positive position. So right now, you know, I like HIMS at this price level, so I'm just gonna keep these, let these, you know, cook, and I have 25K that I'm collecting here. But if I were to open up a position today, I'd probably go out the week after earnings, so 25 days out, okay? And I would go to the 42 strike. I feel very safe there. It's a 6% ROI, obviously not guaranteed. These numbers fluctuate, but 42 strike, collect 235, and that's a nice, that's a nice price to potentially get assigned HIMS or not get assigned, because the stock, I believe, is going to head much higher from here. So, you know, what I see is it continuing along this trend line and then picking up speed and going up significantly. So I guess we're going to have to wait and see on HIMS. Their earnings should be good. I believe in the company long term. And if you zoom out, okay, this thing is already trending nicely upwards, and that's what we want to see on the stocks that we typically trade. PE ratio is 69, so it's under 100 for a mega growth company here. And I do believe this stock is undervalued currently. So that's going to be the play on HIMS. Now, those are the three stocks that I believe are heading up from here. Now, I do have two other stocks, which is Robinhood, which I believe is heading down from here. And I am kind of eyeing this $95 level, okay? 95 is kind of the sweet spot for me, where I think I will definitely be picking up some leaps here, okay? Some leaps call options, but I'm waiting for that to happen. All right. We are overextended on the RSI, still overbought. And now we just made a bearish crossover on the RSI, okay? If MACD also makes a bearish crossover, then I think we will get our $95 target here before earnings, which would be a good place to, you know, buy a long-term leaps call option position for a long-term hold. So that's going to be something that I'm eyeing right there. Definitely a good long-term upward trending chart, but I do think that this thing is heading down in the next week or two, maybe prior to earnings. So let's go to the position just so I could show you kind of what I currently have. Hood position, 132K in cash secured puts. All right, we're going to click on that. I currently have the 88 strike. So I feel safe at that, like super safe at 88, getting assigned. As you can see, if I move this down, right? If the stock goes below this by earnings, which I'm playing earnings here, okay? That's basically from all-time highs at 23% discount, which I'm totally happy with, and I'm comfortable owning shares at that level, okay? So that's why I'm just keeping those puts until earnings, as you could see, the week of August 1st, and earnings are July 30th. So I feel comfortable there. And what I would do going forward is, hey, if you want to play earnings, you know, if I wanted to play earnings at this point, I would go to August 1st, and I would just pick a super safe delta. I'd probably go to, the 90 strike for a 1.52% ROI in 11 days. Remember, that's not guaranteed. These numbers fluctuate, okay? But I feel safe at that 90 strike, okay? So that would be that. And then if the stock does come down to 95, I will go out to Jan 15, 2027, and I'll pick up most likely the 90 call options, okay? Which will cost me about, they may be cheaper at that time. They'll probably be around $3,600 per call option. And that'll give me some leverage to be able to control 100 shares and ride that back up. So that's going to be my leaps play for a Robinhood pullback, which I do think may happen, okay? Now, the next one is Palantir. Palantir also very overextended. I mean, we are, apparent on the RSI, we're not technically overbought, but this thing has had quite a run, okay? From all-time lows here, or from lows during the crash, rather, we're up 135%. So, I think this thing could pull back kind of to this mid-Bollinger Band line, and that's kind of what it's been doing. It's just been bouncing off the upper Bollinger Band, kind of heading slightly below lower Bollinger Band, below mid-Bollinger Band, and then kind of going back up. So I think it would be healthy for this thing to come down to, 142, maybe even 145. And at that point, I'll probably play it again for a leaps option. All right, so I already have cash secured puts, but I'll probably play it for a leaps option and ride it back up. So if we go to the current position, I have about 107K in cash secured puts. So I've reduced my exposure. I used to have 140K, and now I have the 133 and 135 puts. So let's kind of take a look. And if I wanted to play this, I would go out to earnings, right, which is August 8th. And I would probably go to the same strike that I'm currently in, the 135s, which is a 2.76% ROI. Remember, those numbers aren't guaranteed. They fluctuate, but I feel comfortable at that strike. It's a 22 delta, and if I got a sign there, it would be, a pretty significant discount from current levels. So if we go, from all-time highs down to 135, it's about a 13% discount from all-time highs and a good entry point near the lower Bollinger Band. So that's kind of what I'm expecting for Palantir. I do think it had kind of an overextension on this run up. Volume is getting low, and I do think some people are going to start taking profits prior to earnings. So just be aware of that. Long-term, very bullish on Palantir, but short-term, I do think this thing could see some rotation out of it. People just taking profits, rotating into stocks that are kind of beat up like Amazon and safer plays like that. So if you do enjoy this video, please give it a thumbs up, and I'll see you in the next one. Take care.